Good morning, trading world. I am back, fresh off of a birthday and vacation. While I was gone, I got a good many emails and replies about what I think now that we've had this big bullish run. Simply put, I am still bearish. However, it's not right now, this very moment, bearish. I'm going to go back over some things I said last week to kind of clarify why it's not right now, this very moment, bearish. But the first reason or first thing is that on the daily MACD, right here, we can see we are gaining delta or starting to go back vertical. And I have a very important rule that says never short a vertical MACD. We're looking at this on the daily time frame, so if I'm taking a position that's anything outside of intraday, it means don't short. Now, intraday scalps don't really matter, but in this rule, whenever you see this MACD gaining traction here and you're taking a position over outside of intraday, that is a no-no. Don't short that. Now, second, I have a target of 416 to 421 for this bear market rally to end. So we should get some high-level consolidation with a last-ditch all-out effort to get to somewhere between the 416 and 421 area. I call it the springboard diver formation because it reminds me of a diver jumping on the springboard before diving from up high. The weekly outlook supports this, and diving into that weekly outlook, we have a bearish bias closing below the 411.99 with a possible retrace of around the 394 area. I give the 416 to 421 area to be achieved anywhere between this week and the 26th of August. As long as volatility continues to sink in this 22 to 20 area, instead of wasting time chasing retracements, I'm looking to build a pretty good size position in $10 wide VIX call spreads. I touched on where we are in the Elliott wave pattern last week, and we'll go over it again. Alright, now here we are back with the Elliott wave pattern. We have completed the motive phase because we have had our peak here at 479.98. So now we are in the corrective phase of the Elliott wave pattern. Now, the corrective phase consists of 3 lettered wave patterns. Right here we have wave A, then we have wave B, and then we have wave C. Now, from here, this is something I've been waiting on for quite some time. This bear market rally, in which I have been quoted in saying on numerous occasions that a bear market rally can even be more violent than rallies in a bull market. And from basically the bottom to where we are here on the actual ES itself is almost a 500-point rally. Now, with a little help from the Fibonacci sequence, we can see our target here of 418.21. I like to account for overshoot, so the target I have set is somewhere between 418 and 421, or actually I should say 416 to 421. And the reason I'm bringing up the 416 is because one of our major channels is right there on that line at 416. So this right here is what I was talking about being very pivotal, making it to this 418 area. Because if we can't break through the 418 to 421 area in the next couple of weeks, for me it pretty much means we're going to have another motive phase, but this time that motive phase will be bearish, meaning we're going to have these 5 wave patterns. Instead of going to the upside, it'll be going to the downside. And that will line up pretty much with what I've been saying about saying we're in a structural bear market, and that a structural bear market will have at least 4 to 5 legs. So for me right now, where everybody's starting to look and think we're at the end and things are over, to me, with all the news that we're having and the way companies are starting to guide on the earnings, this is still in the beginning phase. My projections for the month are bearish, closing below this 411.99 with a possible retracement back down around the 386 area. And if you followed me for any time, and I've probably mentioned it 2 or 3 times, that I'm expecting the low of a leg somewhere between late August and September. So this all kind of lines up with the projections that I've had. All right. We've talked about the Elliott wave, talked about the corrective phase, and starting a new motive phase down. So let's go back and get into the key levels to watch for today. Alright, here we are back with the key levels for today. Starting on the resistance side, we have our jack resistance at the 412 to 413 area. Then we have our queen resistance 414 to the 415 area, and then king resistance 416 to the 417 area. On the support side, we have our jack support at 410 to 409 area, and then we have our queen support 408 to the 406 area, which is going to be pretty important today, and then king support 405 to the 398 area. The main thesis for today is bearish, closing below the 411.99 with a projected target low of between 410 and 398. The alternate thesis is bullish, closing above the 411.99 with a projected target high of between 412 and 418. The current major channel we are in spans from 397 all the way up to 416. And this is the reason why I kind of brought that 416 up when I was talking about the target at 418, because that major channel, the edge of that major channel sits right at 416. Now the next major channel up spans from 416 up to the 425 area. So if we break through that 416, the next line of defense or stopping point could be around that 425. Now there are some very high leftover imbalances high above where we are. This could take days to go back and get. So I expect us to kind of chop in a huge range back and forth, pretty much a volatility box, if you will, where we're going to go back and forth for a while before giving one last ditch all out effort to get back up here to go get those imbalances around that 416 to 418 area before actually falling over. With all of that being done, let me bring up the scenarios for the day. Alright, our first scenario today, it's pretty between our expansive range day structure and our trend day down structure. In fact, probabilities are really close between the two. But starting off with the expansive range day structure, we could look to set a decision area high boundary around the jack or queen resistance area. Before falling around the queen support, then trying to start a march back up. That's going to be our expansive range day structure, and the closer we get to the opening, the more I'm starting to favor or look more at the next scenario, which is going to be our trend day down structure. Alright, this scenario is our trend day down. We open gap down and start with a rally back towards the previous close, represented by the blue line. We find resistance on or before that previous close, then begin our downtrend for the morning, which is also known as our golden window, the best time to trade. We then find our midday chop around either the possible queen or king support area, and a lot of times going into the second half of the day, we continue with a head fake, looking to continue the main trend from the morning, but then we end up closing with a rally going into the close. Sometimes it's very small, sometimes it can be a decent rally. But that is our trend day down day structure. And let me correct myself, because this should be the number 2 scenario, but I'm rushing this morning, wanting to get things out. I'm a little rusty since I've been on vacation for a while, so got to get back right. But that is our trend day down structure. All right, in our last scenario, we have our rounded reversal day type structure. We could get a continued push lower off the cash open toward the Jack or Queen support area and find midday chop around either the Queen or King support area before spending the same energy we used going down to go back up the second half of the day. So those are the scenarios that I will be watching for, watching to play out today. And one thing to kind of keep an eye on, I really went back and kind of went over some things to kind of give you where I got the targets from, what I'm waiting on to happen. But another key thing that I didn't really touch on at all is risk in the market. And as we've come across these last couple of weeks, market makers' expected move has been shrinking. But at the same time, the amount of movement that we actually have in the market is still very decent. So with the market makers' move shrinking and real movement still being good size, we're getting ready to run into an area where, as we've pretty much seen, that the market is very bad at analyzing risk or very inefficient at realizing risk. And this becomes very dangerous to positions where anything short term, as far as selling premium or anything of that concern, it gets very dangerous for those type of positions. So I just want you to be mindful of that. I may talk a little bit more about that on the next pre-market. We'll see. But as always, please know and understand your risk, because in my eyes, the most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding what we have at risk at every moment. With that being said, I'd like to close out by wishing you a positive trading day. Hope this helps. Have a great one.